Hey guys, John Paulamy here, Actionable Intelligence. Today is Saturday, November 3rd, 2018, and this is the weekly market update with a subtitle, Uranium Bull Market is Now Confirmed. So, pretty good amount of news this week. Wanted to kick things off with talking about the Cameco third quarter earnings call. It was earlier this week. And I will put a link to the transcript, which I highly recommend all uranium investors and speculators read and reread a couple times. I have plucked out what I think are some interesting and pertinent comments that were made on the call. But like I said, I think that if you read it in depth and then kind of think about what's going on and what's being said, you know, this is the 800-pound gorilla. They're a publicly traded uranium company, the second largest supplier in the world. And although the management is conservative by nature, you can definitely sense a tone shift and an optimism starting to build. So let's review some of the. I'm not going to get into all the financials. They're really not relevant at this point. I think they made a little bit of money. They declared a dividend of 8 cents. But I think the comments on the uranium market and what they're seeing are what we as speculators in the uranium names are interested in seeing. So one of the things that was commented on is that these are all quotes from the transcript. I'll just go ahead and go through them. The first one being that there's no question that the uranium spot market is showing a significant improvement compared to a year ago. Now you notice that I have taken this small quote, but there's a context around it. They're not saying it's going gangbusters or anything, but they are saying that there's significant improvement compared to a year ago. And that's what we want to see in an emerging bull market. As I've said before, it's a 3 to 5 year ride, guys. If you can't stick around, if you don't understand how these things get going and how they build optimism over time and they build a critical mass, kind of like a fission reaction that builds slowly, or the snowfall on an avalanche. What's the last snowflake that's going to make this thing that lands on the rest of the previous snow that's going to kick off the avalanche? We don't know, but you want to be positioned and you want to be ready for when it happens. So continuing on, the improvement has been driven by meaningful production cuts, reductions in producer inventories, and an increase in demand for uranium in the spot market from producers and financial players. Well, we've been tracking this all along and we know this. They go on to say, since the end of July, we have secured about 2.9 million pounds to off-market activity and through requests for proposals in the spot market. So they're confirming that they are active in the spot market and they have been taking down material. They go on to say, we expect we may still need to purchase an additional 1 to 3 million pounds in the spot market for delivery in 2018. So they're going to continue to be active here the last 60 days, 59 days of the year. So this is good information that people wanted to know. They were curious about, what was Cameco doing in the spot market. So now we know they are active in the spot market. So pushing on through the call, looking at 2019, we are now committed to deliver between 27 and 29 million pounds. So that means for 2019, we now need to purchase between 10 and 12 million pounds to meet our delivery commitments and maintain our desired inventory levels. So that's why you really need to go read the transcript for yourself, because I can't fit the whole thing in here, nor do I have the time to go through. It'd be an hour and 2 hour video. They talk about where they're getting supply from Cigar Lake, from their partnership in Kazakhstan. But they also go on to say, like I said here, the quote that I pulled out, they're going to have to go purchase 10 to 12 million pounds to meet our delivery. So they go on to say, we've already started entering spot transactions to secure this material for delivery in 2019. So no, not only are they finishing up their purchases for 2018, they're already consummating transactions for material that needs to be delivered next year. What I think is good, or what gives me optimism, is taking all of that into context, that they're in the spot market buying, that we know these other financial players like uranium participation and yellow cake are in buying, and that there are even more private equity deals happening, and possibly even more of these type of transactions of financial players entering the spot market. This final quote, I think, really gives me optimism. And the Cameco management says, although it's too early to determine if any trends are emerging, in general, the volume of material on offer has not been surprising and appears to be decreasing. So let's tie it all together. Cameco shut down their main mine, McArthur River, Key Lake, took all that material offline, said they're going to go in the spot market and buy it. We've got financial players entering the market now and other speculators. And Cameco management, a very conservative management, not some junior mining company that's trying to put the best spin, a conservative, well-run company is telling you that the volumes they're seeing in the spot market are decreasing. So this has to bode well for the uranium price going forward. I think the pieces are falling into place where we can kind of say that this uranium bull market is kind of getting confirmed. We don't know, obviously, how far it's going to go, how long it's going to take, but I definitely can see the green shoots are, starting to develop into real, blades of grass here. Another important thing that I wanted to point out was, stole this off of Twitter, Clan Dat Thou Capital. Again, I guess a riff on Spaceship Troopers. But anyways, I think this is important. It's kind of light colored, so you might not be able to see it, but let me tell you what it is. It's basically the uranium price from about 2011 to recently. And you'll note the trend line, which has been broken. I'm not big on technical analysis, but this is, I think, interesting, because one of the things I am interested in, being a Meb Faber fan, is trend following. And what you can barely see, and if you can't see, just go on Twitter and look this chart up. Not only do you see that straight trend line that's been broken to the upside recently on the price of uranium, as it's cracked $29 a pound this week, but there's a wavy line that's following down. It's a 200-day moving average. And you will see that the price has cracked above that. If you go look at some of the trend following literature or papers, this is a pretty significant indication of a change in trend. And it doesn't mean we go straight up, but what it does mean is that, this 7-year, 8-year grind down, if you will, since, Fukushima, it looks like it's ending. You could see back in, 2017, late 2016, you had the final waterfall, and then there was a bounce, and you see the lower highs and the lower lows, basically, where you see the movement higher. But when you see the penetration of the 200-day moving average, and then trading above that, what you will see now is that 200-day will start to flatten out and then turn upwards. And that will start to begin to attract trend following money also. I'm not saying it's going to be a significant flood, but what I'm trying to tell you is this is actually pretty significant from a long-term perspective. That's why I wanted to include it. I'm not one of these guys that uses charts to trade in and out. I've tried to do it before. I haven't been successful. I'm not a trader. But I think from a longer-term trend following perspective, this is an encouraging development. Just wanted to point this out, not trying to give anybody the needle, but again, as this bull market continues to emerge and the confirmations continue to pile up, I think that as speculators, you really need to know what you own. On the left here, we've got I've got a chart of uranium participation. I talked about it last week. It was, we had the big drawdown in the markets over the last month, and that included uranium participation, which just holds physical uranium. So the price of uranium was actually moving higher, yet the stock was moving lower, and that's just a reflection of the lack of, when liquidity events hit, when drawdowns happen, and stocks go down, that include, uranium stocks are still stocks, so you're going to see that. But what I wanted to say is, like, if you look at the longer term, if you pull it out, you see as this thing grinds higher, the physical uranium price being reflected in the price of uranium participation. And then you look at, on the right, and I'm not picking on this, this is just because we've talked about it before, is Uranium Energy Corp. And you see, serial stock issuance and dilution would it get you? So this hasn't played out, of course. This is just short term. This is not a trend. I'm not, throwing cold water on UEC. Obviously, when this thing really gets going and it's a rip your face off uranium move, I think everything's going to go up with uranium in its name. We'll be back to the promoters in Vancouver and Toronto. They're going to grace us with about 300 or 400 new uranium companies, but that's years down the road. But what I wanted to point out here is that you really need to be doing your research. You really need to understand what you own. And, I think it's prudent. I mean, you may not get the same bang for your buck. Everybody's trying to look for that Paladin or that Mega or that, whatever that's going to go up 10,000%. The best investors in the world, guys, like a Warren Buffett, averages over his career, and you can verify this by going to the Berkshire Hathaway website, averages, 20% a year over his career. So averaging 20% a year over a 40-year career turned the guy into a billionaire, multi-billionaire. Same thing with Prem Watson in Canada. If you look at Fairfax Financial, he's compounded his capital at about 17 to 18% a year. He's a billionaire over the last 25 or 30 years. The uranium price from its lows back in the spring is up over 40% now. I would like to find the next Paladin of the last cycle that goes up 10,000% or 100,000% or whatever it was. But, in these times of uncertainty, and we are really getting storm clouds with the various economy and political situation, I'll take a 40% return in, 6 months. That's nothing to sneeze at. And I think that doing good research, making sure you know what you own, and really kind of spreading your bets around, as we saw with the Berkeley situation. You can't just put all your chips on one bet. We don't have the advantage anymore of having the of uranium URA. The ETF has been diluted by the fund managers, but you still have the Geiger counter fund that trades in London that's well diversified, or you should be building your own diversified portfolio. And I don't have any problem with owning Cameco. I own it. That should be the cornerstone of your uranium portfolio. It's the 800-pound gorilla. It's going to move quite nicely in this bull market, and it gives you that ability to sleep at night, and it gives you that rock that you can tie the rest of your portfolio to. So it's the same thing with physical uranium. Physical uranium is still so cheap, guys. It still represents a total value. They put out the net asset values of these vehicles, and if you were able, with this latest drawdown, for example, you were able to buy physical uranium for less than it was actually selling for. It was great arbitrage. That's what you should be looking to do. That's what professional investors and speculators do. If the market's going to give you free money, you should pick it up. So I know a lot of guys are out there. There's a lot of young guys that listen to this, and you just want to, run, get the one that's going to go what's going to go the highest, the fastest. But guys, that's not how real wealth is created. I'm probably going to do some more videos about this, about how to strap it on and for the long term. And, I made those same mistakes. I was like, I want it now. I want it fast. Give me something. I'm thirsty for that name. It's not how it works, guys. It's not how it works. So, you have to look at the example. It's why I created the newsletter that I have. I even talk about it in the About section of my website. I made all those mistakes, guys. I wasted a lot of time. I could have been, knowing what I know now. That's what I'm trying to pass on to you guys. This is an opportunity over the next 3 to 4 years to make a tremendous amount of money. Don't blow it by not playing it correctly. All right, time to move on. Oil just got crushed in the last couple weeks. I don't know why. Like I said, I'm not a trader. I think you can say, sell the news about the Iran sanctions. There was a big unwinding of a lot of bullish futures contracts, more bad data around the supply front, as the USA is now the largest oil producer in the world, something I didn't anticipate was going to continue, but yet it continues to make new highs, our supply, even with all the constraints. But I think from a longer term perspective, I'm still very bullish on oil. And for the factors I've brought out in the past. I mean, I don't think that's really changed in the last 2 or 3 weeks just because we had this big drawdown in the oil price. The fact of the matter is that demand growth is relentless, depletion is relentless, and the lack of investment will eventually catch up with the oil price. So these short-term fluctuations, machinations, I mean, we have to keep an eye on it, obviously, because a lot of the rest of the world economy is slowing. That's a fact. Energy demand and growth is incumbent upon economic growth. So the USA is still putting out good numbers. Had excellent job report this week, and things continue to be very positive in the U.S. However, things are slowing down in the rest of the world. However, from a longer-term perspective, I think that we still have an opportunity here, and the lack of investment over the last 3 or 4 years will be a problem. So it bears watching. I want to speak to the trade idea I put out the other couple weeks ago on CCX, which is the Canadian oil ETF. Yes, I still own it as a trading little short-term trade. It's not necessarily, it's down because oil prices have come down, of course, but the factors there that could cause the tightening of the spread between Western Canadian Select and WTI are still in effect. I mean, Whiting, I'm on a wind project in Illinois. I just got one of the cranes from the Whiting refinery. That refinery turnaround is finishing up. That one refinery takes about 10% of Canada's heavy crude oil. So as that refinery comes out of turnaround, as other refineries come out of turnaround, we're going to see, that WCS price slowly creep back up and tighten back up, that differential. That's the bet. It's no guarantee, of course. So the other thing that I've been following and noting is that crude by rail is being vastly expanded by the railroads in Canada. That is really being hampered by the amount of tankers, cars available, and just personnel and locomotives. I mean, there is just so much opportunity there, but it takes time to ramp up. Not only that, you have Enbridge Line 3 expansion is in effect. That'll be finishing up later next year. So there are opportunities here. And I'm not necessarily going to say that this is a bad bet. I mean, the Canadian energy sector is selling at depression levels, like it's going to dry up and blow away. But that didn't stop Husky Energy from buying MEG Energy, which is a heavy oil producer. That was announced about a month ago. So I think near the bottoms, you start seeing these mergers and acquisitions, and you could say that maybe it was a bad buy by Husky, but you could also say that the price was right and they're thinking long term. So still have that trade on. It's getting close to a stop loss, though. I would let folks know if I sold it, but that's just, that's not advice. That was just an opportunity, something that I was doing too. So whatever your risk threshold is, you need to look at that for yourself. So having said that, I want to move on. Goehring and Rozencwajg put out their Q3 letter. This is a must-read for anybody in the resource markets, speculators. I just want to hit on a couple things around oil. They cover everything in there. They're very bullish on copper, very bullish on uranium. It's about 30 pages. I'll put a link to it in the show notes. But I wanted to go over a couple of things that they said in their letter discussing oil. They have just, in previous letters and in this letter, reiterated something that has been true, and that's the chronic underestimating of oil demand by the IEA. So I think, when you see proclamations by the IEA about oil demand, they ratchet it down, their forecasts. I mean, a lot of stuff needs to be taken with a grain of salt because they've been really wrong for a long time. The other thing that was pointed out and needs to be kept in mind is that the China and India's entering the S-curve in their development vis-a-vis resources demand and specific oil. Just unrelenting oil demand growth over the next couple decades. Now, obviously, if you have a worldwide recession or depression, which I'm not forecasting, that would definitely put a crimp in oil demand. But if you have even slow growth, you're going to see oil demand as these places urbanize and industrialize. They also discuss the inability of non-OPEC supply growth to match demand and depletion, and the fact that the overestimations, I think, that are still accurate with respect to shale growth in the United States, which we've talked about in previous calls. Kind of got a typo here, but they really carved this out too and spent some time on this, and I think it's very pertinent. It's, why did Saudi Arabia cancel the Aramco IPO? What are the kingdom's true oil reserves? Now this is very important, because if you were going to IPO, have an initial public offering of the shares of Aramco and list them in New York or London, because of security laws and the way disclosure is, Aramco would have had to disclose what their true reserves are. They would have had to have somebody come in and actually analyze the reserves, and they would have had to publish these and make them public. And this is very important because Saudi Arabia has released no reserve data in over 40 years. No one knows what their true reserves are. They constantly are claiming 240 billion, 260 billion, something like this, of oil reserves, yet they've been producing, anywhere from 8 to 10 to whatever million barrels a day every day for the last 30 or 40 years. And so it kind of boggles the mind that, their oil reserves would kind of like stay around the same. So in the letter they go through that. It kind of harkens back to 2008 when Matt Simmons, who's now deceased, he was a big-time guy that ran a firm around oil and analyzing oil markets for companies and stuff like that. But he published a book called Twilight in the Desert, which brought up some of the same concerns or ideas around the fact that Saudi Arabia has been basically lying to the markets about their true oil reserves. And I think that's been true. I believed it then. I think that it's going to manifest itself at some point. I think for various political reasons, and I can't get into on this call just because it would take too long, but there's a lot of political and economic and issues around why they do not disclose their true oil reserves. But I will sum up this call and really encourage you to read the letter if you're interested in this. It's very important, actually, to over the next few years and into our future on this planet, as we use oil for many things. It says, we strongly believe Saudi Aramco's reserves, as reported today, are overstated. The Saudis, for a variety of reasons, do not wish this to be exposed. So, still a bull long-term on oil and oil services. It's taken a shellacking. It's oversold. So we'll see what happens in the next few weeks. We'll see if this is a precursor to a cowbell, if you will, of maybe lower economic growth around the world being forecasted by these commodity prices. Not sure. It could just be something temporary, but we'll keep our eye on it. Oil was overextended. It's kind of troubling it didn't make a new high before it turned down, but that's something we'll be watching. So that's it for this week, guys. Went a little long, but I wanted to talk about some of these things in depth. Appreciate the support. Continue to please, if you like what we're doing here, comment, ask questions. As you know, I'm very active in the comment section. I look at this as like a tribe. I get a lot of people emailing me information. I appreciate that. I try to respond to every email. I do work a job too and do this, so it gets a little bit, if I'm a little bit slow, don't take that as a personal slight. It's just I got to catch up on a lot of stuff, especially on the weekends. So appreciate all the inputs, and guys, keep subscribing, keep hitting that bell. And like I said, if you like my work and you want to feel that you want to help me in some way, subscribing to the channel is one way you can do it with no effort. Joining my Patreon and supporting me financially. If you do that for $5 a month, I will give you the current month's, and only the current month's, current stock recommendation in the Actionable Intelligence Alert. And speaking of the Actionable Intelligence Alert, we've had some really good successes in there around some of our uranium stocks that we've picked, and some other companies are doing well. It's kind of a mixed bag. We've had some underperformers, but we've also had some outperformers. So that's the way it is when you're speculating in the resource markets. That newsletter is for people that want to turn $1 into $10. If you want to turn 10 into 11 and you want to have a long-term investment framework, I suggest go talking to a financial advisor. The newsletter is really geared for speculators and people that want to carve out a portion of their portfolio to try to get some market-beating returns and that's what the newsletter is for. So if you're interested in that, that information is in the show notes also, and we encourage you to take a look at that. So thanks again, guys, for the support, and we'll talk to you next week.